All right, hi everyone. Welcome back to our weekly trading forecast for the week of 29th of June to 3rd of July. So my name is Dylan, and over here I have JJ with me. So let's kick off with the dollar index. All right, so for the dollar index, we are looking at the day chart right now. So maybe just let me remove the drawing first. Now, for the dollar index last week, we can see that the price came down and went back up again. So essentially, it's still trading within the range. It's actually trying to form a ascending triangle right here, as we can see the low is getting higher. So we are still in the process of a pullback. So right now we are seeing that the price is being resisted at a resistance level right here at about 97.7 or 96 point something, right? So let's go down to the 4-hourly charts. So in the 4-hourly charts, we can see that there is some form of a reversal right here as price reaches the resistance level right here at the top, 97.65. And in the 1-hourly charts, we can see that the price is still being supported by a rising trend line. So this week, right, I think the dollar will still be ranging. Of course, do take note that this coming Friday, we have the NFP as well. I doubt it will have a very huge impact, but of course, just watch out. So prior to NFP, mostly the market will be volatility will be low. So most likely price will continue to range. So in my perspective, I think for the dollar, either we wait for the price to break low, to break this trend line, and possibly it's best that it can break below the previous low right here, and then we wait for the pullback and sell at the top of this ascending triangle back to the bottom somewhere right here. There's also a small demand zone right here at 96.7, 96.8. And if the price were to go down further, then we can look at the support level right here at 94, 96.5. All right, of course, all the way to the bottom of the range again. So that's one thing. But if let's say the price were to break higher, break out of the top of this range or this ascending triangle, do take note that it is still on the it is still going upwards. So if I were to pull this trend out, okay, well, it looks like that. Okay, never mind. I'll just delete all of this, okay, and for the channel. Okay, it could be on the rising channel. All right, so even if let's say if the price break upwards, okay, there's very little upside. So in another way, you can also see as wait for the price to reach a top right here, then you go and sell top of the channel, because that will show us that it has completed the entire pullback based on the previous downtrend right here. Okay, and of course, unless it breaks downwards, okay, back to this trend line, you may want to go and buy. So in any case, since we are expecting a ranging market, I think it's best to either buy at a low or sell at a high. Pretty straightforward. But in my case, I will favor selling the dollar more than buying the dollar. Especially this week will be very important because the monthly candlestick is going to close. And why is that important? Because in the weekly time frame, we know that there is a rising channel, right? And this month itself, if let's say the price is able to, you know, close below this, okay, close below this channel, then that will definitely trigger more selling pressure from here onwards. Okay, so watch out for this month. You will be pretty good, critical to dollar, and of course euro dollar as well. So let's just quickly take a look at euro dollar. So for euro dollar, very much like the dollar is still ranging. So price came all the way up. in fact, it is still trading at the top of this entire riding channel. But you can see that the downward movement is kept at a very volatility is low. The downtrend is not that strong. It's still finding support at this. Still supported right here, 1.117. Okay, how about that price? 4-hourly charts, high is getting lower, low is getting higher. So it's still trading within a symmetrical triangle. So the way to trade euro dollar is just like how we are going to trade the dollar as well. What I think is that in the 1-hourly charts, you can possibly wait for the price to pull back outwards again, somewhere right here at this supply zone. Okay, we can try to sell again back to the bottom of the symmetrical triangle, or all the way to the bottom of this entire falling channel, which can be seen in the 4-hourly charts. So that could be somewhere at 1.113. Otherwise, just wait for the entire pullback to finish. Okay, and somewhere right here, at this demand zone, okay, we can try to look for opportunity to buy. Okay, so again, it's just trying to buy the top of trying to sell at the top of the range, or trying to buy at the bottom of the range. So that's for the euro dollar. Okay, and with that, I'll pass my time over to JJ to share his view for this week.
All right, first for this week would be dollar CAD. See this week price is climbing upwards and it's reaching a supply zone, which also coincides with the 61.8% Fibonacci retracement. So I believe that this level would be a good price to sell the dollar CAD. We should wait for some form of resistance before selling a dollar CAD, and we can take profit right here where price was seen being supported multiple times. However, if price were to break above this level, it would also break above this trend line, and I believe that more upside would be seen if that's the case. Next would be pound dollar. So pound dollar this week quite bearish. We can see that it has broke this rising trend line, and it retraced and it got resisted again at this level. So I believe that there will be more downside for pound dollar this week, but we should wait for price to reach around this level. If it could reach that level, we could see that this is quite an important area of interest where price was supported multiple times. So let's say if price could continue this bearish downtrend back into the 1.2 level, we could look to buy pound dollar at this level again. So this will be my two analysis.
All right. Thanks so much for your sharing. Yes. Dollar CAD, the level that JJ was talking about has multiple what you call that. Multiple indications to sell, such as the falling trend line. Two wave of retracement will be completed by then. There's a supply zone right there. So trades like this are usually a safer bet as well. And of course the take profit, the margin is big enough as well. So that's a good trade. And pound dollar, yes, I'm also focusing on 1.2. Is a really important level. Yes, although the entire trend does look very bearish for the pound dollar, pound is really weak, but I think 1.2 is a very critical level for us to try buying at that level. I think the rebound will still be very strong if there's an opportunity to buy at that level. Okay, so let me go back to my screen right now. All right, so two more. All right, two more. There are two more instruments I want to share about. Number one is definitely the gold. Let me just remove some of the lines right here. So for the gold, we can see that last week the price continued to rise in the day charts. Okay, price continued to climb for the first 2 days, and finally it has broke above the previous high at 1,754. 1754. Yeah, okay. So that was the highest price for a really long time. The price has been ranging. Finally, it broke new high again. But after that, we can see that it started to pull back shortly. But then it started to found support again, and price has started to rebound and climb again. So I just want to look. Let's just look at the bigger picture. Okay, gold is a is a pair that's every time it went into a long range, right? And after it broke out of the range, it will come up with a very strong trend. So if I were to kind of measure the volume of every uptrend, okay, like for instance, this is after the range. Here's another range. This is the uptrend, okay, from the bottom right here. Okay, this is the entire uptrend. Went to a range. This is the entire uptrend. You can see that the levels, the volume are really very much alike. These parts, okay, if I were to, take away this portion, okay, you can see that this is also a range, and this is the entire uptrend as well. Volume is pretty much the same. Now the price has went to range again, and finally is breaking upwards, which tells me that there's a good chance that the price will continue to rise as much as this volume, and this is more than 1,200 pips. Okay, the entire uptrend is about 1,300 pips. So we still have a lot of upside. There are very clear signs that the gold is actually starting to climb, is into a uptrend already, a bullish trend. So we should continue to look to buy, and especially the US COVID cases has been rising as well. In fact, it has broke all-time high of 30 something thousand in 23rd of April, 24th of April. Right now it's over 40,000. Um, so I think it's going to increase demand for safe haven assets such as the gold, which has been reflected in the price already, more to go. So this week, if we look at the 4-hourly charts, we can see that the price is currently supported by a rising trend line. So it has already started rebound off. So you can go into a smaller time frame and see if there's a pullback, a quick or short pullback into this previous range itself, and to look for an opportunity to buy the gold again. All right, and of course, the target itself is all the way at the end of the entire volume. There will be somewhere 1,810. But just take note that in the weekly charts, there is a very important resistance level or a supply zone, okay, between 1,802 to somewhere at about 1,770, sorry, 1,781. Right here is, this is a close to 9 years of a supply zone. All right, so it is somewhere right here already. Okay, but definitely we still have quite a good amount of profits to make from buying the gold. All right, so that's for the gold. And last but not least, I want to talk about the Dow Jones. So the Dow Jones has started to fall again, but in fact, it is still in the range. So what happened is that after the crash, they started to recover sharply, very fast, and right now, and finally, it found resistance at about 27,700. Came crashing down again and broke below the rising wedge, as you can see right here. It broke below the rising wedge right here. And this was because of the sudden jump in the US COVID cases. If I can just show you what I mean. This is during, this is on the 11th of June. This is plus 8 GMT, so it's maybe about 12 June in US. So if we look for 12 June, right? Yeah, 12 June is where the US COVID cases suddenly jumped and broke the previous high, because you can see that the COVID cases has been going down, the high is getting lower. And then on the 12th of June, it actually went higher. So that caused a panic and caused a sell-off in the US markets, Dow Jones, of course. And after that, it just went into a range up till now. But as you can see, the COVID cases has broke all-time high throughout the entire week. And therefore, I believe there will be more downside. Since this is only one wave anyway, after you just went to range, we should at least expect another wave of a downtrend of equal volume, if not more. So based on the candlestick formation we have right here, strong bearish candle, small body candle, and followed by a strong bearish candle, candlestick formation which I like a lot, to tell me if the trend is about to kickstart. All right. So with this, I definitely believe that in this week, together with the fundamentals that we have right now, Dow Jones will continue to fall. So first level, of course, we want to look at the the top of this previous range. Of course, at the breakout area, that's somewhere about 24,800 to, yeah, that's about the price. So that's the first take profit level, and then all the way to the bottom at this demand zone right here, this demand zone. So this is the price of 23,000 to 23,600. That will be the final price I'm looking at to take profits for the Dow Jones. All right, so with that, I have come to the end of this weekly trading forecast. So thank you so much for watching, and I will see you again next week.